Adrian Ash, what's your long-term view of gold's reaction to the Eurozone's problems?
Well, gold is clearly hostage to the euro crisis right now. The crisis isn't quite imminent enough, not quite clear enough to be driving money into gold. Instead, at the moment, you've got money going into, obviously, U.S. Treasury debt. You've got it piling into German bunds. You've got record low bund yields right now. I think that's because you've got a liquidity crunch going on. I think you've got a flight to cash, and you've got the deflation risk that comes out of, the uncertainty. What could be more deflationary than a monetary crisis like this? But at the moment, it's just not quite imminent enough, not quite there enough to make money, go back into gold. I think there's a lot of fatigue with the gold story in the broader investment markets right now. And I think a lot of analysts in the professional market in London are agreeing that what we need right now in the gold market to get it back above 1,600, which is starting to look like a big psychological level, is a big bullish piece of news for this. It might be a monetary response, say from the ECB or the Fed. You had just this week a new call from Citigroup's chief economist, Willem Buiter, looking for a helicopter drop, basically saying that these low bond yields are not doing anything for consumer demand. We need to push harder with more aggressive monetary innovation. I think it's that kind of thing which a lot of analysts are now looking for as being a revival in gold demand right now.
Is there any fears of some of the Southern European central banks selling gold to raise money? Because if Greece is on the edge, they're going to need money if they break away from the euro. They're going to have to sell some gold. I suppose likewise Spain, which sincerely needs the money to buy some of the struggling banks. So any worries that more gold's going to hit the market?
Central banks don't sell gold when they need it. They tend to sell gold, as we saw 10, 15 years ago, when the price is low and when it's not a political issue. I don't think there's any fear of a central bank actually selling its bullion right now, particularly those who look like they might actually be leaving the Eurozone, because they're going to need something on which to found a new currency, and not having any bullion in the reserve would not be a good place to start. There's a further problem whilst they remain within the Eurozone, which is the central banks cannot subsidize, cannot finance government debt. It's illegal under the terms of the Euro Treaty. What you might be seeing, and there have been hints and rumours and whispers, as there always are in the London market about this kind of thing, of maybe a central bank leasing it out, and that might be actually impacting the price right now as well, because it means that there's more leased supply hitting the market.
This market is
stock tickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to